Okay, everyone, welcome back to the Liquid FX YouTube channel. Here we have an outlook. So in this particular video, I'm going to be going over gold, pound yen, and US 30. So these are the three most popular markets that I get asked to analyze, looking at the daily time frame, the 4-hour time frame, etc., etc. It's just going to be higher time frame perspectives or higher time frame narratives based on where I think these particular markets are going to go or they're going to head to next. Comment below, comment in the sections what other markets you'd like me to look at, and I could potentially look into those and to help, hopefully help as many of you as possible in a wide variety of markets, including commodities, crypto, indices, futures, and of course Forex. Any other markets you want me to go over, I'll be more than happy to add that to the potential YouTube watch list. So without further ado, let's get into the gold outlook. So this is the daily time frame of gold, and of course NFP was an aggressive bearish move, right? So just to highlight a few things over here, right? So the reason why this was predicted ahead of time in the community was simply because if we look at the most recent structure on gold, again, what we had over here is we had a high over here, the all-time high up until that particular day. So this is April the 12th. We did see a minor correction, but then it's very important to understand one thing, right? This high over here wicked up this high. So what it tells us is that it's not a clear breaker structure. So anyone who thinks this is a breaker structure, that is incorrect. We've not seen a break with a body above the previous high, and therefore this is deemed as a sweep of liquidity. So let's mark that in as LQ, right? This is a liquidity sweep, or simply a sweep of liquidity. And so from there, again, we use our yellow box, of course. The yellow box represents a sweep of liquidity. And now what we need to understand now from an analytical perspective is that this low down here, which tried to break the previous high, failed, right? It's a weak structural low. And so now I do expect lower prices below this daily level over here. So this is a daily drawn liquidity, right? This is our drawn liquidity. And what makes this a drawn liquidity is simply because this high over here did not break the previous low. It swept it, and therefore it is, as it's not broken, it now becomes a weak structure. This is now the next drawn liquidity. I expect price to head below this level. So this is at the, if I were to label this for people, this is at the price point of 22.77, right? So this is now at 22.77. So I expect price to break below 22.77. So now the question becomes, how low do I expect gold to go? That's the question. Well, from here, if we look left, key levels, right? Where are the inefficiencies? Where are the fair value gaps? We see efficient price all the way over here. I wouldn't count this as a real candle for a POI, but the next overall inefficiencies are all the way down here, right? So this is the next inefficiency. So let's draw a POI, right? This is a point of interest. Now, again, what makes a point of interest, and why is a point of interest different to an order block? An order block is where we actually trade from. A point of interest is exactly what it is. It's an area where we seek price to potentially go to, and therefore it's an area that we pay attention to, i.e. a point of interest. So let's label that for people, right? So this is a daily POI, a daily point of interest, right? So the way that I see the markets currently is I see the markets will definitely break below 2277, and this POI is all the way down here, right? So the price of this is 21.97. So let's quickly label that as well. So that's 21.97. So price does have the potential to come down all the way to 21.97. Now, will it get all the way down here? It's a possibility, of course. We can only predict in the markets, right? This is an analytical video. I'm sharing my analysis. I do expect lower prices down to this kind of region over here. This daily POI will be assessed if price does get there, but there is a possibility as we have a fair value gap over here. So this is the overall outlooks on gold. Let's quickly head down to the 4-hour time frame. Again, we have our daily POI over here. What does the gold 4-hour time frame tell us? So again, we have our structure. So let's start with our structure. Those who have seen my previous videos understand that we operate from a structure, dealing range, premium and discount arrays, and then fair value gaps. So what we have over here is we have our structural high over here, right? So let's label that in orange. 4-hour structure is always in orange. So we have a structural high. Then we saw a correction over here, structural low. Now from here, we see a structural high. We see a break of structure to the upside, boss. Now, after we've seen a break of structure, the next thing we are now looking for is we're looking for a POI within our dealing range. So this is a bullish dealing range from this swing low up to this swing high. So this is our current dealing range on the 4-hour on gold. Okay, so again, the dealing range low is at 22.77. I expect price to break this region, and the dealing range high is up at 24.54, right? 24.54 up here. So again, the NFP, right, or this NFP week last week was pretty aggressive to the downside, right? Now, the next thing we look for is our premium and discount array. So we have our 50% level over here. Anything below that, as you know, is a discount. So again, how do we interpret this, right? So here we have a fair value gap or an inefficiency, right? A very small inefficiency because this wick did come in, but nevertheless, an imbalance is an imbalance. So again, what we have over here is we have an inefficiency in price, just like this, right? So we label this a 4-hour point of interest. And again, what makes this a 4-hour point of interest? Well, it's simple. This point of interest over here led to the break of structure up here. It's priced in the discount and it leaves an inefficiency. So now NFP, what we've seen is we've seen NFP pretty much break through this 4-hour POI, right? So this POI now has become invalid and I don't expect it to hold. And that's the reason why we have lower prices overall, right? We have lower prices because this 4-hour POI hasn't held and we have a daily zone all the way down here, which could be the next potential target. So this is how I'm looking at gold, right? If there's one thing you want to take away from this, it's to understand that we have achieved somewhat of a premium, right? Friday, NFP day, we saw price come into a premium. So we've seen price come above that 50% level. Extra confluence for lower prices. And we understand the markets will seek premium to discount and discount back up to premium, right? So we're looking for inefficiencies to the downside to potentially target. And the next overall higher time frame inefficiency is all the way down here at this region. So expect somewhat of a lower prices over the next few days and weeks. Now, of course, we could see something like this. We could see a clean break of structure. We could see a retracement and then ultimately come down to this level. So these are potential scenarios that you should put into your head prior to the following week. So this is my overall analysis on gold. So now if we move over to GBPJPY, GBPJPY has been pretty consistent with the overall bullishness. So if we head over now to the daily time frame, or sorry, let's go to the weekly time frame. The weekly time frame itself paints a picture that's very, very much bullish, right? Nobody can really argue this. And the reason why, if we zoom out and we look at structure from a very sort of bird's eye view, going back since the beginning of time, you could say on this chart, we have a weekly POI up here. And notice how this POI is in the premium above the 50% level. And therefore this POI, this premium zone, is the next overall target. Yes, we've had many bullish weeks leading up to that. I think the majority of this year, in fact, the whole of this year has been bullish. We've only had a few bearish weeks in between. But ultimately, for those who trade GJ, I expect price to get up to this weekly POI. And this weekly POI, if I were to label it, is targeted at 210. The price of 210. So I expect price to get up to 210. Simply because it's a premium POI that's left a fair value gap, and I expect price to get up there for that reason. Now, the daily time frame again paints somewhat of a similar picture, where what we've had is we've had structural breaks to the upside. We've had numerous structural breaks to the upside, right? How many structural breaks have we had? We've had a structural break here, and we've pretty much had a structural break over here. Not the strongest of breaks, but we've pretty much had a break of structure over here, right? Have we? Technically, we haven't actually. It's just a wick. It's just wicked up. But ultimately, there isn't really much inefficiencies over here that was left at the beginning of the month. And so therefore, GBPJPY, the ultimate target now would be this weekly POI. So anything on the GBPJPY should be strictly buys, right? We should be looking for price to maybe either have a reject of this fair value gap and just head higher, giving us a consistent higher highs and higher lows and higher highs and higher lows. So this is the higher time frame analysis on GJ. And now the final pair we should be looking at now is the Dow Jones or the US 30. So these are the three most popular markets that I don't personally trade myself, but they've been known to help people in the community and outside of the community. So I'm just going to sort of do my best with this pair as well. So again, the US 30, let's head to the weekly time frame. Again, we're in a unique situation. We're in a unique situation with the Dow Jones, right? Because the Dow Jones has given us yet again an all-time high in the markets. This here is an all-time high. We've had a break of structure. I personally will not be trying to call the tops. That's probably the biggest lesson you can take from US 30. So your job as a trader is not to catch certain moves. You do not want to catch this over here. You do not want to catch moves like this over here. You do not want to try and catch moves like this over here. Catching tops is the worst thing you can do. It's one of the worst things you can do in trading, right? Just stick to the trend, right? It's the old age phrase that we hear all the time. The trend is your friend until it ends. Just follow the trend and follow the overall structure, and don't get caught up with trying to catch tops and bottoms in a bearish market. It's just not the way it should be. So now we're at an all-time high with the Dow Jones. If we head down to the daily time frame, the daily time frame paints a similar picture to that of the weekly. I don't see signs of this, going anywhere really. What we've had is we've had daily structure that's broken twice, right? So what we've seen is we've seen daily structure. So we've seen a break of structure down here to the bottom left. We've seen a break of structure over here, and we've seen a break of structure over here. So overall, we're structurally bullish, and notice how we're respecting POIs, or we're respecting bullish fair value gaps. Respected, filled with a wick, we've headed up higher. Right now, again, 4-hour bullish POI. Hell, let's go down to the 4-hour quickly and have a look. What we have over here is we've had a break of structure. So a 4-hour break of structure over here. Let's label that. So structurally, we're bullish. That's the first thing you need to understand, right? Now from here, we have a dealing range to work with. This is our dealing range, right? Dealing range low and dealing range high. And now we have a 4-hour POI. Now, what makes this POI valid is a question I get a lot, right? So what makes this POI valid, right? Why are we looking at this POI? So this POI is valid because it breaks structure. We see a clear box or break of structure. It leaves an inefficiency or a fair value gap. Therefore, price has a reason to head lower, rebalance the inefficient price action that was delivered at an earlier date before mitigating and heading higher from that. And the last thing we want to look for is that we want it to be below the 50% level. So we have a, not premium, we have a discounted region, right? Below the 50% level. So these are the three driving factors to any POI in any market on any time frame. So from here right now, the overall narrative I have on the Dow Jones is also bullish, right? I don't want to be fighting any kind of trend because we have our confirmation. We've reacted, we've bounced off, we've rejected this 4-hour POI pretty accurately. And now from here, what we have is we have 4-hour inefficiency. So we have a fair value gap over here to target with a line. And we have a massive inefficiency pool over here, which I'm going to label in blue. So with all these things in mind, having come from a premium, coming from a discount, going into a premium, with a clear fair value gap above and some liquidity over here on the lower time frames, the overall narrative for the Dow Jones is also bullish, right? Targeting inefficiencies, targeting liquidity, going from discount heading to premium. So this is the overall narrative. So for GBPJPY and US 30, we are bullish overall. And that is my analysis, my high time frame analysis. So if you like this video, give it a like and thumbs up. And I look forward to seeing all of you in the next one.